Hey guys, Ryan G. Wright with DoHardMoney.com coming to you with a Just Ask Ryan question of the day. I do this every single day. If you've got a question about real estate investing, finance, please type it in the comments below. And if you're selected this question today, I'll be answering your question in one of my Just Ask Ryan questions of the day. And today's question is it worth paying for points for a lower interest rate? Now, paying down points, the idea with that is you pay money up front in order to get a lower interest rate. So if the interest rate was 5% and you paid $1,000, they may lower it to 4.75%. Now, those rates and fees change all the time. So if right now it's gonna cost you $1,000, next week it might cost you $2,000 or it might cost you $500. That's fluctuating. So that just depends on the market conditions as to what it costs to actually buy down the interest rate. And I'll tell you this, the real answer is it depends. What you have to do is a cost breakdown and say, what would my payment be if I didn't buy it down? And how much am I buying it down for? And then you can divide the two of those. Once you do, you're gonna come up with the number of months it will take you to break even. So for example, if it was gonna save you $100 a month and it was gonna cost you $1,200, then your break-even point would be 12 months. Now, it's never like that. You're usually gonna save like 10 bucks a month and it's gonna cost you $2,000. But I wanna do that for simple math. You're basically saying, how much am I saving per month? So you have to say, what would my payment be if I didn't buy it down? What would my payment be if I did buy it down? And I take that and divide it, the difference between those payments, I divide it by the amount of money it would cost me to buy the rate down, and that tells me how many months or years it will take me. And then you've just got to look at it and say, hey, it's going to take me 3 years or 5 years to pay for it. And then you say, how long am I planning on staying in the property? Because if you're going to be in the property for less than the 3 or 5 years, you're going to be in there for 2 years, let's say, it doesn't make any sense to buy down the rate. But if you plan on being in the property for 30 years, it makes a whole lot of sense to buy down the rate. It also can help you just from a cash flow situation. Put a little money up front and save you a little bit every single month can be a great way to do that as well. So buying down the interest rate really just comes down to how much it's gonna cost you, where your break-even point is, dividing the two of those so you know the time frame, and then deciding how long you're planning on being in the property for. If you enjoyed this, please hit me with a thumbs up. I would really appreciate it. And if you've got a question of the day, type it in the comments below and I'll get that answered for you. A couple other videos you should check out is the easiest mortgage to qualify for. You're gonna really enjoy that video, as well as loans for real estate investors. Check out that video as well. Now, if you wanna help finding properties, if you want tools, tips, if you want finance, hard money, check us out over at DoHardMoney.com. Otherwise, make it a very profitable day and bye for now.